I'm really pleased to introduce our first keynote speaker for today's Tax Research Network 2020 Annual Conference Education Day. Dr. James Hannam has worked in Big Four and Magic Circle firms now for over 20 years, advising clients and looking to improve the internal technical communication of tax knowledge within the businesses that he's worked for. However, he's probably better known to most of us as the author of the great book, What Everyone Needs to Know About Tax, an introduction to the UK tax system. This was published in Wiley in 2017, and I suspect is on the reading list for many of you for your courses. And if it isn't, you really should get hold of a copy, because it's a great introductory guide that walks students through the basics of the UK tax system and tries to explain to them some of the history of why we've got some of the complexity that we have, and complements other tax books, therefore, really effectively. He's also a freelance journalist, in addition to working in specialist technical tax areas, and a historian. This is borne out in two of his other projects. Firstly, a book that he published recently called God's Philosophers: How the Medieval World Laid the Foundations of Modern Science, which was shortlisted for the Royal Society Science Book Prize. And also his current project, an interesting history around the idea of the globe, how the earth became round. So I commend James's talk to you now. I've had the pleasure of already listening to it, the advantage of this being pre-recorded, so I know you're in for a great session. And I look forward to hopefully you joining our live session immediately thereafter, if you are watching this during the time of the conference. Thank you, James, and over to you.
Hello. I think we can all agree that the quality of our national conversation about tax is not great. But now it's become extremely urgent because we need to face up to the massive debt the government has incurred dealing with the COVID-19 crisis and the tax rises that will be required to service that debt. Longer term changes are going to necessitate new taxes as well. The £30 billion raised in fuel duty will wither away as cars go electric. And the £10 billion from cigarettes and tobacco is being eroded by vaping and people giving up altogether. So the Chancellor is going to need a lot more money, and the only place he can get it from is us lot, taxpayers. And, as a general rule, we're not keen. Well, some people are. A group of 85 wealthy individuals called Millionaires for Humanity has recently called for taxes to rise on themselves. One of them, Richard Curtis, the film director and writer who gave us 4 Weddings and a Funeral, and Love Actually, went on record to say he doesn't think he pays enough. I'm sure we'd all applaud his philanthropic gesture. Although, if he does want to pay more tax, HMRC make provision for voluntary contributions. I'll be happy to send him the relevant web link if he's interested. It turns out that what Mr. Curtis is actually saying is that rich people should be paying more tax even if they don't share his generous instincts. And when you're calling for tax to rise on other people, you're not engaged in philanthropy. You're engaged in political campaigning. But of course, tax is political. There's little in life that's more political. As a historian, I found tax is a driving force behind all sorts of social developments, both positive and negative. When the Emperor Caracalla extended Roman citizenship to all free men in the empire in 212 AD, it was so he could tax them more effectively. The English Parliament was born because the king needed to raise money. And when you look closely, tax is usually a factor in sparking revolutions, including our own Civil War and the French Revolution in 1789. On a happier note, the imperative to tax has been one of the driving forces behind democratisation. Representative governments find it much easier to raise taxes without sparking a violent revolt. So when I decry the quality of popular debate about taxes, I'm well aware that it's still miles better than the alternative that people have had to pursue through most of history, that is taking to the streets and overthrowing a government by force, usually to see it replaced by something just as bad. Even here in the UK, two of the most egregious examples of civil disobedience in my lifetime were caused by taxes: the poll tax riots of 1990 and the fuel protests in 2000. And remember, both these insurrections were largely successful in their stated aims. The poll tax was abolished in short order, and fuel duty has been frozen for years now. Over the Channel in France, the Yellow Vest protests have been simmering away for months, preventing President Macron from pursuing much of his economic reform agenda. I think this underlines how important the public conversation about tax is. It goes beyond economics. And when it goes wrong, it can tear apart the fabric of a nation. The fundamental problem is simple. People want public services, but they don't really want to pay for them. The government's usual solution is to get them to cough up in ways that they don't really notice. In my book, What Everyone Needs to Know About Tax, I summarise this quandary with 3 golden rules. The first is that all taxes are paid by people. Like it or not, there is no one else who can pay taxes apart from us. Second, lots of small taxes add up to big tax bills. The government raises money in all sorts of ways to prevent the dead weight of tax being felt too keenly in only one place. And thirdly, taxes are kept as invisible as possible. The government doesn't want us to notice what we're paying, so it usually gets someone else to do the collection. That's our employers in the case of PAYE, or businesses in general when it comes to VAT. Forget about these rules and you can get into a world of trouble. Most obviously, when politicians talk about public money, they almost always break the first golden rule of tax, that all taxes are paid by people. Instead, politicians give the impression that it is money that belongs to the government itself that pays for the NHS or subsidises theatres. And because the link between public expenditure and tax is so obfuscated, we lack the capacity to have a grown-up conversation about what we are really willing to pay the government to do for us. The second and third golden rules matter too. Successful taxes are kept small and discreet, or at least out of sight. One of the great tax policy fails of the last few years happened in the spring 2017 budget, when Philip Hammond, the Chancellor at the time, ignored the rules. You'll all recall he wanted to abolish Class 2 national insurance contributions on the self-employed and increase Class 4 NICs by 2% to align them more closely with the rates paid by employees. Now, Class 2 NICs are only about £3 a week. So when the previous Chancellor, George Osborne, first promised to abolish them, he must have thought it was just a cheap bit of tidying up. Alas, a tidy mind is the enemy of effective tax policy. As Osborne himself really should have known following the fiasco of his 2012 omnishambles budget, when he tried to tidy up the VAT treatment on Cornish pasties. Trying to do away with Class 2 national insurance contributions collided with the second golden rule of tax, that lots of little taxes add up to big money. It turned out that abolishing Class 2 NICs, which are low enough for many people to hardly notice, would cost about £400 million a year. Meanwhile, increasing Class 4 NICs on the self-employed violated the third golden rule that taxes should be kept as invisible as possible. The self-employed, of course, pay NICs under self-assessment, which isn't invisible at all. In contrast, Class 1 employees' NICs are seriously obscured by the PAYE system, while employers' NICs are practically undetectable by taxpayers. Hammond's handbrake turn, I'd say it was a great deal more violent than a mere U-turn, showed that even the Chancellor Exchequer can fail to understand how tax works, and this leads to failed policy decisions. Class 2 NICs are still with us, while Philip Hammond is apparently now working for the Saudi Finance Minister. I suppose I could have added a fourth golden rule, that taxes are paid in ready money. Ancient empires might have been willing to collect taxes as bushels of wheat or indentured labour, but today governments find anything other than cold, hard cash to be more trouble than it's worth. About the only exception I can think of is the acceptance in lieu scheme to settle inheritance tax by handing over some of the family art collection to a museum. The need for taxes to be paid in cash has a profound effect on how they're collected. It means it tends to happen when money changes hands, such as when we buy something or when we get paid, or indeed when we shake off this mortal coil and hand our wealth over to the next generation. That's the biggest downside of wealth taxes, the alleged panacea for a government in debt. True, the total wealth of the UK population is pretty enormous, in excess of £15 trillion, and it's concentrated in relatively few hands. Almost half belongs to just 10% of the population. But there's a problem. UK wealth is largely in not liquid form, property and in pensions. Despite the boom in buy-to-let and periodic spasms of concern about empty properties, the £5 trillion in housing wealth is mainly being lived in. On the other hand, the objection that wealth and capital taxes represent double taxation doesn't really hold much water, despite what you sometimes hear from right-wing commentators. The huge increases in house values that we've seen over the last 3 decades are untaxed and unearned. If the government could find a way to access that wealth beyond the measly £5 billion odd it gets from inheritance tax each year, it could make a sizable dent in the deficit. Just as important, a new long-term source of funds would improve the government's ability to service its debt and so keep interest rates lower. The trouble is, last time someone tried to access all that housing wealth, it blew up in their face. The Tory manifesto for the 2017 election contained a radical proposal to fund social care by sending the bill to the estate of the recipient after they had died. That meant no one would have to pay for care or sell their home while they were still alive. Essentially, the money would have come out of the untaxed housing wealth people have built up through their lives, sidestepping inheritance tax and all the ways it can be avoided. But in practice, that meant the cost of care was to come out of the windfall legacies that middle-class 50-somethings were expecting when their parents died. Naturally, the 50-somethings were outraged, and the state of public knowledge about how social care is currently funded was so poor that many people imagine that somehow it's currently free. Still, there was unfairness in the proposals because the descendants of people who did not need end-of-life care would receive their inheritance intact. In contrast, if someone was debilitated for several years before they died, much of their estate would be eaten up by nursing home fees. Hence, the proposals were dubbed the dementia tax. And yes, that would have been unfair, but not nearly as unfair as having wealthy parents in the first place who ensured you were well educated and who probably helped with the deposit on your first home when you really needed the money. Linton Crosby, the Tories' election supremo in 2017, said the problem with social care proposals was that they were released too suddenly, with no effort to educate the public about what they were supposed to achieve and why they were necessary. Crosby had a point. George Osborne did much better with the so-called sugar tax. He first announced the soft drinks levy in a 2016 budget. Now that budget blew up in his face when his proposed cuts to benefits led to Ian Duncan Smith's resignation. But the soft drinks levy was a perfect example of how to introduce a new tax. It started small, it was practically invisible to consumers, and perceived unfairness was justified up front on health grounds. As a result, it came at almost no political cost to the government, with only die-hard libertarians kicking up much of a fuss. Perhaps these examples of success and failure can help us with improving the national conversation about tax and hence the quality of policy making. I should say from the outset that I'm very sceptical about grand reforms such as land value tax, universal basic income or a universal consumption tax. In theory, these might seem like great ideas, but the real world is simply too complicated to admit such simple solutions. And getting from where we are now to implementing such radical plans is fraught with political peril, so it would be a foolish thing for a government to risk. Likewise, however nice tax simplification might sound in theory, it's usually more trouble than it's worth. I think the first step to improve the national conversation on tax is to ensure that people know how and why the system works the way it does. I don't mean the nitty-gritty of section numbers and schedules, I mean the big picture. The trade-offs between politics and economics. The reason we've ended up with the unwieldy system we have, and why, despite that, wholesale reform would be inadvisable. And that's what I was trying to do when I wrote When Everyone Needs to Know About Tax. Then, we need to explain that while a functioning economy can certainly have a much higher or lower total tax take than the UK does, it would radically change the complexion of our political settlement. For example, while the UK collects about 35% of GDP in taxes at most, France takes 46% of its GDP. And while France has its problems, it's hardly a basket case. It is, COVID-19 allowing, somewhere where a lot of us British would really rather be in the summer. But France doesn't raise all this extra money with wealth taxes or squeezing the rich until the pips squeak. The big difference between their system and ours is their compulsory social security payments for workers. So we need to stop pretending that we can raise vast extra amounts in tax without most people contributing. The UK is already heavily reliant on a thin slither of the very well paid, primarily in the financial and professional services sectors. That means the UK Treasury depends on those with good salaries, rather than the rich with lots of cash in the bank. It's income tax and national insurance, collected through PAYE, that does much of the heavy lifting, not taxes on investments and capital. To effect a substantial increase in the UK tax take requires recognition that there just aren't enough bankers and lawyers to go round. The government would have to increase taxes on a broad base, which means ordinary people paying more. A sensible policy discussion on tax would recognise that and stop fixating on the rich. A sea change in the UK's fiscal policy would have to affect us all. That's how it works in France. And perhaps that's why it probably won't happen here. Gordon Brown managed to raise national insurance by 2% over 13 years of Labour government, but it's hard to see that feat being repeated by the current administration. Another big pot of money is available from taxing shopping mall. That's how Scandinavia does it. In Denmark, Sweden and Norway, the basic rate of VAT is 25%, with a wider base in the UK, where food of course is zero rated. My personal belief is that a rise in UK VAT of up to 25% is on the cards. When the Tories need to raise serious money, that is how they do it. Less likely would be to broaden the base of VAT to include certain kinds of food. Processed foods could become subject to reduced rates, at least initially. But to do that, the pitch would have to be thoroughly rolled in order to explain the health benefits of an extra tax on crunchy nut cornflakes, as well as the need for the money. I do wonder if the current government messaging on obesity is preparing us for an increase in the scope of VAT, or at least a sugar tax. Again though, to raise substantial sums, we need to recognise that everyone will have to pay. VAT is more of a progressive tax than we often recognise, especially in the UK where food is excluded. But one of its great virtues is the way that it extracts so much revenue from almost all everyday transactions from almost all of us. And what about the £5 trillion in residential property? As it happens, when you add up inheritance tax, council tax, business rates and stamp duty, you find the UK collects a larger proportion of its tax take from property than many other countries do. That makes these taxes unpopular, as they often disregard the golden rules of tax. Stamp duty is a big number, when people move house, so they feel it and they resent it, while council tax is payable in cash you already have, making it an extremely visible tax that has to be budgeted for. Inheritance tax has gradually become more important as a revenue raiser over recent years and now brings in about £5 billion a year. Some countries, such as Portugal and Australia, do without it at all. But only about 5% of UK deaths lead to an inheritance tax bill. Again, to raise serious money, we have to recognise that the base is going to need to be much broader. I think there is a good case for raising more tax from legacies, but it's not something I can see the Tories being able to do, or Labour to admit to before an election. So what can we tax nerds do to improve the national conversation about tax? Firstly, the most difficult part. We need to be more objective. I expect as a group we are more politically involved and motivated than most people. And that colours how we see the world and clouds our judgment, especially when it comes to tax. We might believe that the US tech giants are not paying enough, or that increased social security charges correlate with unemployment. As it happens, I subscribe to both these beliefs. But that is no excuse to tolerate newspaper articles that compare corporation tax payments to a company's turnover, or claims that employers' national insurance contributions are essentially a tax on jobs rather than a tax on employees' income. Tax experts have a higher duty to the public to call out these kinds of mistakes and be honest about how tax really works. Something I find helps is to look at a tax policy I instinctively disagree with and try writing an article in its favour. If the debate about tax became less partisan, it would also help the main political parties escape from the corners they've painted themselves into. Both Labour and the Conservatives have their ideological baggage on tax that limits their room for manoeuvre. As the dementia tax fiasco showed, the Conservatives have made it nearly impossible for themselves to access the unearned and untaxed residential property wealth of the country. Conversely, for Labour, it's hardly on brand to admit that serious public spending requires broader-based taxation. So I think tax nerds need to help both parties accept the fact that a robust tax system needs a wide base, both in terms of people and assets. That doesn't mean politicians shouldn't deal with unfairness at the margins as well. After all, wealthy people didn't all flee the UK because of tweaks to the non-dom rules. Nor should we stop tackling evasion and avoidance. But we also need to recognise that the tax gap is now less than 5%, and the costs of closing it are suffering from the law of diminishing returns. Another thing tax nerds can do is become more vocal. There are all sorts of online publications and journals around today crying out for expert content to explain difficult topics, with more starting up all the time. Journalists are generally aware that their coverage of tax could be better and welcome writers who give the background behind the headlines. The government and think tanks churn out vast amounts of policy material on tax. Most of it is superficially reported and sinks into obscurity. Some of it deserves to, but the public needs more insight into the engine room of policy making. The more commentary we have from people who do know what they're talking about, the better for the national conversation. Finally, we should remember that there are always two sides to any argument. Yes, we should be defending the principle and necessity of taxation, but we must also recognise that no one likes paying tax, well, apart from Richard Curtis, and we should also admit that tax is almost always a dampener on economic activity. We shouldn't pretend otherwise. But it isn't state-sponsored theft, it's a price that we all pay to live in a modern, civilised society, and we should be better informed about it.